Hey, what's going on, everybody? I'm here to do your market update. So let's get to it. Prices of Bitcoin currently at $23,000. We had yesterday the FOMC hike out about 75 basis point, and they're also saying that there's a potential for a large increase by their next meeting. Today, we also got a GDP print, which shows negative GDP. And by some definitions, that is effectively the United States being in the midst of a recession. So how does this pan out for markets and more? So stay tuned, okay? First things first, today's video is sponsored by Bitget, one of the exchanges that I trade on quite a bit now. I think a majority of my focus is on Bitget just simply because I like their exchange. I like their rewards. If you sign up through the affiliate link that I have below or on the top right of the YouTube video, you can earn these potential rewards and any other campaigns that they have for rewards. You can make that money, okay? They also have opportunities to settle your futures positions in coin contracts, meaning you can make money and P&L in these native currencies, or you can make it in USDT or USDC. All of these, in my opinion, are fantastic features that most other exchanges don't have. And so whatever currency or crypto that you feel safe in, whether it's BTC, ETH, or USDC or USDT, you can do that. They also have demo trading accounts where if you are not familiar with the exchange, you get some demo money and you get to test out their exchange with the simulated demo trading accounts. The other thing that I like about Bitget is they have this spot grid trading, which is automatic bot trading. So the bot will actually trade based on the strategies that you've laid out. This is really, really cool. You guys should definitely check it out if you're on Bitget. If you're not on Bitget, get on Bitget now. All right. So real quick, right? If you want to know exactly how I trade on Bitget, what kind of positions I'm taking, my thoughts on the market, go to thealphatrades.com, hit the products page right there, and join our Advantage membership, because this is where we have, within the membership, we have a lot of videos and analysis and my thoughts on the market, where I put out trades, what I'm buying, what I'm selling, what I'm shorting, what I'm longing, what spot positions I'm picking up, what futures contracts, what exchange I'm trading on, how I go about basically the trading day. And so we have a ton of information in these channels, and these are all channels that will be unlocked for you if you buy the Advantage membership subscription with $97 per month, okay? Make sure y'all join, right? I think we put out a ton of analysis, ton of information that if you're not familiar with the crypto markets and you don't have time to stay up to date, that's my job to do that for you, okay? So let's get to the market, right? I think the market clearly is showing signs of a potential breakout, a near-term breakout. Let's go back a couple of weeks, right? This is where you had the 9.1% inflation data print, okay? That was July 13th, okay? That's right there, July 13th. We had a big drop in the market and then proceeded on the way up. Yesterday, we had the FOMC meeting come up right around this area right here. Guess what? The market tried to price in, bad data from the FOMC as well as the GDP data that just came out, right? All of that led to an anticipation of pretty negative prices. We even swept last week's low right there. And now we rocketed back up right as we got that FOMC rate hike right there. We actually spiked up as we got the 75 basis point hike. And now today, we got that GDP print just about less than an hour ago, okay? And yet we're still hovering near the high. So why is it that the last three big events of inflation rising, of FOMC hiking 75 basis points, and GDP data is not nuking the market? I'm sure you're wondering. Well, at this particular point, the market believes that it has fully priced in, at least near term, that prices are either fair valued or near term, they are extremely undervalued. And so whether it's BTC or US equity markets, they're starting to show resilience and they're trying to climb what we call the wall of worry. The wall of worry is basically when you constantly have, negative news slamming the price over and over again. And at one point, negative news in this area does not break the price further. In fact, it puts it in a range and it starts to get the prices going. So negative news hits, price pulls back a little bit, goes up. Negative news hits right here, price pulls back a little bit, goes up. This is exactly what we've been experiencing in the US equity markets for the past 2 or 3 weeks, as well as BTC, like I just illustrated. So where to from here? Well, there's a couple of easier ways to look at the market, which is that as of right now, if we stay above $23,000, the range then becomes 23 back towards this high. Okay, so it's kind of like this. Let me clone this and do this. The range becomes this. Like that. So now the trading range is between 23 and 24.3. If we start breaking back inside 23 and say we reaccept inside 23, then the range is between 23 down to about 28.5. I personally think that if you get a pullback right here and say this level right here holds around 22,000, that will mean that this is a local low, higher low, right? Then you've got your first high, and then you'll need a higher high, which I would figure will be around 24.3. So this is probably a long worth buying somewhere around this $22,000 area. Okay. I don't know about shorting. I guess you could easily short now, have your stop above this local high, because if price goes up to this local high, it's probably headed straight to 24.3, right? So that means that on a smaller time frame, if you look at the market, here's kind of what we did from yesterday's price action. Okay, we hit a local high. If you look on a volume basis, right, volume basically peaked, right around here. Since then, volume has been consistently going down in this area. Okay, lower volume, as you can see, and then even lower volume from here to here. So what this tells me is the market might be locally peaking right here. Doesn't mean it's actually topping, but it may need, a slight retracement before it, ramps up for a bigger move to the upside. Okay, so I think from a 5-minute, 15-minute chart, even an hourly chart, it kind of looks like BTC is going to gear up for maybe a near-term retracement or a pullback towards 22K, in which case this could be pretty solid longing opportunity. Your stop could be under 21.5. Why 21.5? Because this is where we had that big rate hike news come out, yet the market spiked up, right? So technically, like somewhere around 21.5 or this local low would be your stop, because it definitely does not need to go all the way down here before it could go up. Okay, that I don't think is necessary at all. On a daily basis, we have climbed back above the range. So that once again looks good, right? Remember, ranges on a daily basis have been very, very helpful for BTC over the last few months. You can see this was a range high, range high, range high. We broke up above it, found support, could not put in a local higher high, broke back inside the range, and then sold off, right? Same thing right here, which is range high, rejected range high, sold off. Right now, the story is a little different. We are actually sitting above the range high. That range high is around 21.7. Okay. As long as we stay above this high, I think it's possible that we shoot up higher. It's possible that maybe this is a lower high and we start going back down below. But that means that the other conditions must hold true, which is on a smaller time frame, we need to start breaking back, inside 22, inside probably, 21.7, 21.5. And then we can say that's the high. We take this trade down as a short towards 20K, towards 19K. It may be as low as the 17.5 level down here. Okay. I don't quite know yet. I personally think that the opportunity to long is probably better, just because we've had all these negative points of inflation rising, GDP contracting, FOMC, yet the market shows relatively good resilience. And in fact, the S&P 500 is actually showing you the path on the way up. You can see one thing is that the S&P 500, since last week's high, we put in a local higher high. BTC has not done that yet. And that could be a good or a bad thing. I'm choosing right now to see it as a good thing until price, proves me wrong otherwise. But for now, I'm thinking, okay, well, if I get a pullback at 22, I long that. I'm hoping we clear this. If we clear this, then I think we're headed somewhere up here around like 27 or 28 as a higher price point. Maybe as high as these highs up here around 31, 32K. Okay, because that risk to reward is amazing, right? You get long around 22K. Your stop can be, I don't know, like 21.5, or a deeper stop around 21 flat. And your first target profit is this previous range low, which is 28.5, so around 28%, and then 31.5 up here, which is a 46% gain, right? So all in all, I mean, it's a pretty damn good trade. Okay. Other assets that look good to me, Matic still looks pretty damn strong. We're sitting outside this descending trend line resistance. That's good. We want to stay above this area. If Matic pulls back, it definitely needs to stay above this level. This is 80 cents. Does not need to break back inside. So similar to what I showed you in BTC, no need for Matic to break all the way down in here and show weakness. If that's the case, again, Matic might be a short. Stop will be up here. Take this trade back down to local lows, and then previous lows around here, 67 cents, and then maybe all the way down here around 50 cents. Okay. Another asset that looks incredibly strong, again, similar to BTC, you may get an opportunity for a pullback where the market kind of gives you this kind of movement, retest 1500, 1550, that range, and gives you a spike back up towards 1750, $1,800 or something. Okay, so a lot of these assets, I think longing in this area may not be the best thing, just because if the market clears local highs, right? Okay, well, then you can get long on board, stop down here and take this trade towards 1800, 1900, whatever, right? Same thing with BTC. If it clears the local highs, then you just get on board, get long, take that trade to 25, 26, 28K, whatever. Oh, okay. Let me see here. On my Twitter feed, what do I got? I already talked about the GDP data coming in negative. Talked about some potential inverse head and shoulders patterns developing on ETH, right? So keep this in mind. ETH is still sort of trying to push up by relative strength. Like Ethereum has done significantly better than BTC over like the past few weeks. You can kind of see BTC, okay, since the beginning of July, right there, is up about 10%. Ethereum is up about 38%. Obviously, there's other assets like ETC and Curve and Matic that are up 50% or so. But just speaking on a high market cap, bigger market cap basis, BTC is underperforming Ethereum. And generally, you want Ethereum to overperform BTC, because that means that, that part of the market, the risk assets of the market, in the crypto market, that is, they're showing you relative strength and they have the ability to push up higher. Okay. So just keep that in mind. And, here's your inverse head and shoulders that might develop something like that. All right. Let's see any other thing on the list that we see is doing well. GMX we already talked about, right? I mean, definitely pay attention to GMX. I know Arthur Hayes has talked about it quite a bit. Synapse protocol, obviously, people who are into bridges and they believe bridge protocols are going to be a big thing, Synapse should be at the top of your list, as well as Stargate Binance. And then let me see here. Nothing really else that's outstanding. Obviously, like I mentioned, ETC has been kicking ass the last few weeks. Make sure y'all watch this. If you get potential pullbacks into 23 to 38.2 fib, that could be a potential longing opportunity. Curve Finance also, like I said, looks incredibly strong. You know, retested this ascending trend line support right there. So as long as it stays above this red line, which is, y'all can see 125, right? See that right there? It's 125. Okay. If it stays above this red line, that means that it's trying to retest that support. And if that's the case, well, then the next bigger levels of resistance up at the highs is $3 or $3.50, way the heck up here. Okay. Again, that's assuming, you know, the broader market is going to push up. You can kind of see from a total market cap perspective, it sure looks like the market wants to push up. We retested the crypto total 2 market cap, which is the altcoin market cap, here at 525 billion from resistance to support right there. Now we're trying to get through this resistance point, which is $600 billion. If that's the case, then the next move is towards 700 to 725 billion, which is a 22% move in total market cap terms. All right. Anyway, if y'all like this video, hit the thumbs up. Like I said, join the Advantage membership for all this analysis and more trading opportunities, how I look at the market, what I long and short, how I trade on Bitget exchange. All right. That's it. That's all I got, everybody. Y'all take care. Good luck, and we will catch up soon. Cheers.